Okay, let's talk about power. And I don't mean just putting a few solar panels on your roof. I'm talking about owning the entire system that keeps your lights on. Today, we're going to dig into a brand new blueprint for our energy future, one that puts power, literally, back into the hands of communities. I mean, really think about it for a second. We're all plugged into this huge, centralized power grid, right? But what happens when it fails? Or when our bills just keep climbing? Well, this explainer dives into a pretty radical idea. What if the solution isn't some bigger grid, but thousands of smaller, smarter, local ones right in our own backyards? So, to really get the solution, we first have to face the problem head on. Look, our current power grid was an absolute marvel of engineering for the 20th century. But now it's feeling a little, well, brittle. It's showing its age, and you can really start to see the cracks. And this isn't just a technical issue, it's a social one. The way the grid is set up, it often hits the most vulnerable communities the hardest. We're talking higher costs and more frequent outages. It's a system that can actually deepen inequality, and frankly, it's dangerously fragile in the face of the extreme weather we're all seeing more of. It's just so clear that we need something better. And that something better, well, isn't some single magic bullet. Nope. Instead, it's a really brilliant synthesis of three powerful breakthroughs from some recent academic research. So the big idea here isn't one thing, but three different streams of research that are now being woven together to create something totally new. By combining these distinct pillars, a new model starts to take shape, one that's way more resilient, way more fair, and, actually democratic. All right, first up, pillar number one. This is the foundation of the whole thing. It's simple, really. If you want to build a system that's fair, you have to start by measuring what fairness actually looks like. I mean, that's the key question, isn't it? You can't just cross your fingers and hope for a fair system. You have to design it to be fair from the ground up. And to do that, as researchers at the University of Houston realized, you absolutely need the right tools for the job. And this is their brilliant solution. They developed three specific yardsticks to quantify energy equity. First, you've got CEFI, which is all about affordability. Are people's bills actually going down? Then there's CERI for resilience, like how well does a system hold up when the main grid goes dark? And finally, CESI for sustainability. How much clean, renewable energy are we using? These aren't just abstract ideas. They are concrete metrics you can use to plan and run a truly fair local grid. Okay, so once you have a way to measure fairness, you need the actual tech to make a local grid work. And that brings us right to pillar number two, creating a secure, transparent, and local energy marketplace. The core technology here is peer-to-peer or P2P energy trading. The best way to think about it? It's like a farmer's market, but for electricity. If your rooftop solar panels produce more energy than you need, you can sell that surplus directly to your neighbor who needs it. No big utility company taking a cut in the middle. So you're probably wondering, how do you make a local market like that trustworthy and efficient? Well, that's where blockchain comes in. This cutting-edge research shows how it can act as a secure, automated public ledger for the community. It transparently logs every single kilowatt of surplus power, uses something called a smart contract to automatically handle the sale, and settles the payment instantly. It's the secure, decentralized engine that makes a neighborhood energy market possible. So we have the metrics for fairness and the technology for a local market. But that leaves, well, the most important question of all, right? Will people actually want to be a part of it? This brings us to our third and final pillar, human motivation. No, seriously, what's your gut reaction? Is it all about the bottom line, or is there something else at play? A really fascinating survey from the UAE decided to find out. And wow, this completely flips conventional wisdom on its head. The study found that expected personal profit had only a weak influence on someone's willingness to invest. The single biggest driver, with an almost perfect correlation, was whether the project aligned with the nation's broader energy goals. Turns out people are far more motivated by contributing to a collective good than by pure personal profit. That's huge. But there's a catch. The same study found that the average person's self-reported understanding of microgrid technology was pretty low, less than 2.5 out of 5. So you have this huge passion for collective action, but a pretty significant knowledge gap. And that right there is the crucial insight. To unlock this powerful motivation, you can't just appeal to people's wallets. You have to connect the project to shared community values and provide the education people need to feel confident and empowered to participate. Okay, so let's recap. We have our three pillars: the metrics to ensure fairness, the technology for a local market, and the human motivation to make it all happen. So now let's put it all together in an actionable blueprint. Welcome to the ComCoop, a community-owned microgrid cooperative. This is where it all comes together. Just imagine a local grid, owned and operated by you and your neighbors. It's governed by those clear equity metrics to ensure fairness. It's powered by a transparent blockchain market. And it's driven by shared community goals, with a dedicated equity council making sure no one gets left behind. The difference is just night and day. On one side, you have a distant, opaque utility focused on profit. On the other, the ComCoop, a system owned by the community focused on resilience and fairness. And get this means when a storm hits and the main grid goes down, the ComCoop can actually island itself, disconnecting from the blackout and keeping the lights on for everyone in the neighborhood. So at the end of the day, this isn't just a technical upgrade. It's a pathway to a fundamentally different energy future. One that is not only low carbon, but as the researchers put it, is also equitable, democratic, and resilient. So I'll leave you with this to think about. What could your community achieve if you truly owned your power? Thanks for digging into this with us.
Welcome to the Deep Dive. Today, we are focusing on one of the most critical challenges of our lifetime. How do you build a clean energy future that is fundamentally fair? Because for millions of people right now, the energy system is just a huge source of anxiety.
It is, and it's a terrible double burden, especially in low-income neighborhoods. They often struggle with, incredibly high energy bills. The financial stress is immense, and at the same time, they are the most vulnerable when the centralized grid fails.
Which is happening more and more often.
Exactly. Thanks to climate change, severe weather events, they are just left in the dark, both financially and, well, literally.
Right. And the technical answer we always hear is the microgrid. Local distributed energy resources like rooftop solar, battery storage, stuff that can operate on its own when the main grid crashes.
But just focusing on the wires and batteries, it really misses the point.
It misses the entire point. Our mission today is to dive into a powerful synthesis of academic research that creates a cohesive blueprint. It's about moving beyond the technology to focus on equity, fairness, and, crucially, governance.
We've combined insights from 3 really cutting-edge research efforts, and they look at the 3 pillars of a functional system. You have planning, trading, and investment. If we can solve those 3, with justice at the core, we have a real pathway forward.
So our core question for you today is simple. If we rebuild the grid from the local level up, how do we make sure that equity isn't just a nice slogan, but an actual measurable outcome, something that's embedded in the DNA of the system itself?
And that leads us directly to the first major conceptual breakthrough in this research.
Exactly. Let's start with planning, because this is where all those good intentions can just go completely astray.
Yeah.
If you design a microgrid purely to, maximize shareholder profit or just system reliability, you're going to replicate the same old inequality. You need quantifiable metrics for social good. Which brings us to the work of Sabzi, Dudman, and their colleagues from 2025.
What's so fascinating here is that they took this often abstract concept of energy justice and turned it into hard engineering targets.
Yeah.
Their whole argument is that microgrids have to be planned from day one to enhance equity, not just stability.
How do they do that?
They use this incredibly sophisticated computer modeling, the kind that runs through, thousands of storm scenarios, usage scenarios, all to optimize where to put these solar panels and batteries and how big they should be.
So it's not just asking where does the battery make the most economic sense.
Precisely. They're asking a totally different set of questions. They introduced 3 novel, equity-oriented indices to guide that whole planning process. You can think of these as like the 3 non-negotiable pillars of a fair system.
Okay, let's talk metrics. What are they actually measuring here?
So first, they define the Community Energy Financial Index, or CEFI.
CEFI, okay.
This is the affordability metric. Its goal is simple: lowering household electricity bills, especially for low-income residents.
That makes perfect sense. Financial stability is step 1.
Step 2 is the Community Energy Resiliency Index, CEI. This measures resilience, but in a very specific human way. Instead of just measuring grid uptime, it quantifies the reduction in unmet load during an outage.
Unmet load, so in plain English.
It measures how much less time vulnerable people spend without power for their critical needs, heating, cooling, medical devices, when the main grid goes down.
That's the aha moment right there. It shifts the metric from just systemic failure to actual human impact. You're measuring quality of life, not just the quality of the voltage.
That's the key difference. And the third pillar is the Community Energy Sustainability Index, CESI, which is more of the traditional environmental metric. It tracks the penetration of renewable energy.
So the system is only successful if it gets measurable wins across all three: affordability, human resilience, and sustainability. What happened when they applied this model to a real place?
They simulated the planning process in a low-income neighborhood in Houston, a place that gets hit by hurricanes, extreme heat all the time. And the key finding was powerful. When the optimization prioritized these three indices equally.
Equally.
Yes, equally. And especially when they mandated targeted investment in solar and storage for the most vulnerable blocks, they saw significant simultaneous improvement across all three metrics.
Wow.
It proved that integrating fairness isn't a trade-off. It can actually be an optimizing factor. Fairness in this model is baked right into the engineering design.
That is a foundational step. So we have the equity-centered plan, but once that solar is on the roof and the microgrid is running, you need a way for neighbors to actually trade surplus energy. And it shifts us from planning to the market layer, right? The engine of decentralization.
Yeah. Absolutely. Which brings us to the P2P, the peer-to-peer trading challenge that Dong and his colleagues explored in 2025. Once you empower individual households with their own energy resources, their DIERs, they need a transparent and fast way to sell excess power to their neighbor, instead of just selling it back to the big utility at some bulk rate.
And for a system like that, one that needs immediate high-volume transactions, the research points toward blockchain. And not just any blockchain, right? It's a very specific kind.
Precisely. They propose a consortium blockchain. You should think of it like a private club for the local energy users and managers, not a public open network like Bitcoin. And that's crucial because a consortium blockchain uses way less energy, it's much faster for settling transactions, and most importantly for a co-op, it's governed by known, trusted participants, the community members themselves.
So you get the speed you need for real-time energy trading, but also the trust you need for a community market. How does the actual pricing work? Like when I sell my extra solar power to my neighbor down the street.
They use a game-theoretic dynamic pricing model. So, in simple terms, the price of power adjusts moment to moment based on supply and demand right there on the local grid. If everyone's generating tons of power in the sunny afternoon, prices drop. If everyone rushes home and cranks up their AC at 5 p.m., prices are going to spike. Smart contracts just automate the whole settlement instantly.
And the research showed this system works. It achieved, what, rapid price convergence and better energy use, which all sounds fantastic for economic efficiency.
It does. It maximizes the value of every single electron. But this is where the inherent tension comes in. And it's the main problem the final blueprint has to solve. Dynamic pricing maximizes efficiency, but it directly conflicts with our first index, CEFI, the affordability goal.
Right. Prices spike dramatically during peak demand. Who gets penalized the most?
It's always the financially vulnerable user. Always. If a low-income family can't afford to run their AC at 5 p.m. because the market rate is temporarily through the roof, the system has failed the equity objective, even if it was technically efficient. We've just traded one kind of financial burden for a new, decentralized financial volatility.
So we have a system that is technologically smart, but socially dangerous if you leave it unchecked. We need more than just tech. We need people to willingly participate, and we need the right governance to manage that tension.
That brings us perfectly to the human element, social drivers. Before we can figure out how to govern these things, we have to know why people even choose to invest in them in the first place.
And the third paper tackled this exact question with a survey of property owners asking about their willingness to invest in microgrid tech. Now, if I were designing a market pitch for this, I'd probably leave it.
That's the logical assumption. But the results were genuinely surprising. The researchers measured all the standard drivers, profitability, disaster readiness, even the environmental factor of carbon reduction. All of those had a relatively weak influence on whether people said they'd invest.
So what was the statistically significant factor? What actually moved the needle?
The single factor that stood out, with an incredibly strong correlation of 0.942, was strategic alignment with national energy goals.
Get out, really?
Really, people were most willing to put their money down if they felt their investment was contributing to a larger collective goal, a patriotic plan, a municipal strategy.
Wow. That just flips the entire investment narrative on its head.
Yeah.
It suggests that for these kinds of, collective goods, people are driven by pro-social preferences, a desire to be part of the solution, a collective identity way, more than by a simple calculation of individual economic gain.
It's a massive insight. It tells us that this system can't be purely economic. It is fundamentally a socio-technical system. To make it work, you need the technology, sure, but you also have to appeal to civic pride, collective purpose, and community trust.
This finding also reinforces the need for strong governance.
Right.
Because if investment is driven by this pro-social intent, that intent has to be protected from, technical exploitation like those price spikes hitting vulnerable people.
Exactly. And the synthesis addresses a related social conflict here, complexity versus participation. The survey found that even the property owners they polled only had a moderate understanding of microgrids. Their score was like a 2.46 out of 5.
Not great.
No. And if people don't understand the system, they won't trust it, they won't invest their social capital in it, and they definitely won't support complex training rules.
So the solution has to be robust enough to handle the complexity, simple enough to inspire that social investment, and smart enough to mitigate the tension between efficiency and equity.
That is the perfect summary of the challenge. And it leads us directly to the comprehensive solution blueprint that integrates all three of these papers. The community-owned microgrid cooperative, the ComCoop.
Okay, let's get into the specifics of this ComCoop. It's structured as a true cooperative, right?
That's the core societal structure. Every participating household holds membership shares. That gives them a voice and a real stake in the system. The architecture itself is this multi-layered approach to energy justice, synthesizing everything we've talked about.
Walk us through those layers. How does the planning research fit in?
That's the infrastructural layer. So the cooperative's charter legally mandates that all future investments in solar, storage, whatever, must be optimized using the CEFI, CERI, and CESI indices. They can't just build where it's cheapest. They have to build where it maximizes community-wide affordability and resilience for everyone.
So those indices are legally binding guideposts for their infrastructure. And the P2P trading system, the blockchain, that forms the market layer.
Correct. And that layer deploys the speedy, community-controlled consortium blockchain and the dynamic pricing model, but, and this is the crucial part, with embedded equity constraints.
Okay. And the third layer, the human element, that pro-social investment. That's the socio-institutional layer.
Yes. This layer ensures the co-op aligns itself publicly with those municipal and national sustainability goals, leveraging that strong collective desire to contribute. But this layer also contains the vital governance mechanisms that are required to protect vulnerable members from the market's volatility.
Let's focus on that governance. What specific mechanism protects the community's equity goals?
The blueprint mandates the creation of a dedicated equity council. And this isn't just some advisory committee. This council has to be comprised specifically of members who represent the vulnerable populations within the microgrid, low-income residents, fixed-income seniors, people like that.
And what power does this equity council have? I mean, beyond just offering suggestions.
They hold actual structural power. They are mandated to continuously monitor the equity indices, CEFI and CERI, and they can recommend real-time policy adjustments if those metrics start to slide backward. And what's more, any major changes to the cooperative's charter, especially things that might impact those equity metrics, requires supermajority consent from the entire membership.
That is a critical safeguard. So if, say, a majority of wealthier members decide they want to remove price caps to maximize their own trading profits,
they can't do it.
They can't just outvote the low-income members who rely on those protections.
Exactly. It prevents the system from being, weaponized by individual economic self-interest. It reinforces that collective pro-social mission that drove the investment in the first place.
Operationally, how do those equity constraints actually work inside the dynamic pricing model?
Yeah.
What does it look like when the high-efficiency trading system is forced to be fair?
There are a couple of key mechanisms. First, the algorithm provides baseline energy allocations at subsidized fixed rates for low-income members. So they can run their fridge, their essential cooling, without ever fearing a price spike.
That provides a safety net.
It does. Consumption beyond that subsidized baseline might then face progressive rates. But conversely, the system can offer bonus credits or higher fixed tariffs for low-income members who successfully export renewable energy back to the community. It helps them build personal wealth.
And it incentivizes sustainable behavior at the same time.
Right. The key is that the revenues generated by the high efficiency of the P2P market are channeled back into funding these very subsidies and community protections.
This blend of economic incentive, tech efficiency, and social protection. It really does unify the three strands of research. What's the immediate, tangible impact we can expect from a community that adopts a ComCoop?
The short-term impact modeling is very clear. You see immediate improvements in the CEI, so lower energy bills for those who need it most. You see higher CERI scores, meaning greater resilience, shorter downtime during storms. And because the governance is built on participation, workshops, energy literacy programs.
What you need, given those low understanding scores.
Absolutely. Because of all that, you foster the significant growth in community cohesion and trust. The system becomes a source of empowerment, not just a source of power.
So the ComCoop isn't just an energy project. It's a social infrastructure project masquerading as a utility upgrade. It offers a clear, actionable pathway for a just energy transition by making sure decarbonization benefits vulnerable communities first.
Absolutely. The overall synthesis demonstrates that success really hinges on integrating robust, technical design like optimized solar and blockchain trading with explicit social goals, all underpinned by dedicated governance structures like that Equity Council. This really is the blueprint for the next generation of energy democracy.
It's powerful, and it's comprehensive. But we've established that complex socio-technical systems often carry unintended consequences. And the research points to one major ethical risk that stems directly from the system's success.
That's the critical final layer for you to consider. The risk of gentrification and displacement.
Explain that. How could providing reliable, cheap, clean power possibly lead to displacement?
It's an unfortunate but predictable economic feedback loop. If a community successfully implements a ComCoop, its residents immediately benefit. They get lower utility costs, far greater climate resilience, a better quality of life. The neighborhood suddenly becomes a highly desirable place to live.
And as desirability increases,
Property values rise dramatically. This attracts new, wealthier residents who then raise housing costs, raise rents, and ultimately they price out and displace the very marginalized low-income groups the microgrid was designed to protect. The system's own success becomes a social threat.
so the community achieves energy justice only to lose housing justice. It's the ultimate tension between infrastructure improvement and housing stability.
It creates a tremendous ethical dilemma. The research synthesis doesn't provide a technical energy fix for this, but it strongly suggests that communities have to implement simultaneous non-energy solutions. Things like establishing community land trusts or enacting affordability covenants on properties to maintain affordable housing stock outside of the energy system.
That is the next layer of complexity we need to consider in planning a truly just transition. And it's a powerful thought to end on. How can communities successfully implement cutting-edge solutions that dramatically improve local resilience and affordability without inadvertently triggering a crisis of housing gentrification and displacement? That is the big question for you to explore as you continue your learning about the true scope of a socio-technical energy revolution.